Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG, and we thought we'd come to you today with a brief market update, kind of let you know what's going on out there. S&P 500 as I speak is right at about 4210, which is basically the high for the year. Over the past couple of weeks, we've been locked in this sort of mid 4100 range, and over the past couple of days, we've broken out above that, up to around 4200, a little above 4200 for the S&P 500. And that's really due to some progress that we've seen recently over the debt ceiling talks. The debt ceiling obviously being an overhang for the market, a fear overhang for the market as we roll into that sort of June 1st, the government's going to run out of money unless they give themselves permission to spend more deadline. We've always sort of said, hey, that's going to have a lot of fiery rhetoric when you're kind of far away from the deadline. But as we get closer and closer to that June 1st date, you're likely to see the moderates kind of come together and figure out a solution to the problem. That certainly appears to be happening, although in Washington, I would never say anything is certain. But there are a lot of rumors out there that both McCarthy and Schumer are preparing votes for next week on some type of bipartisan deal, which would indicate that the two sides are willing to kind of come together. So that's obviously very good. In other news that's out there, I would just note that we wrapped effectively first quarter earnings season. That earnings season came in surprisingly well. Earnings per share down 3.3% for the companies that reported versus expectations of about down 8%. It's kind of funny when you think about markets. It's not necessarily about absolute performance. It's about performance relative to expectations. And in that sense, the first quarter was a success. Last but not least, just briefly touch on inflation. We're going to get a little bit of Fed speak today in what is otherwise a very, very quiet day. Powell is speaking later this afternoon. I think on the inflation side, we continue to see lower numbers, kind of 0.3s, 0.4s in the core, on a month-over-month basis. I just would reiterate to everybody that we're really going to need to see that reading drop to about 0.1, 0.2 for a couple of months before the Fed really decides that they can take their foot off the brake. That doesn't mean that we're likely to see interest rate rises anytime soon, but it does mean that these sort of Fed funds rate in the mid-5s are kind of here to stay in our view for at least the next couple of months. So without, as always, if you have any questions, please feel free to reach out to myself or to your advisor. Hope you're having a great day, and I look forward to talking to you again soon.